Okay, so Fermi America just dropped over $470 million on heavy physical infrastructure in a single quarter. And they still do not have a single paying customer? Welcome to Earnings Unscripted. It is March 30th, 2026, and we are unpacking the Q4 results for Fermi, ticker FRMI. It is quite the story.
It is the definition of a high-stakes game, and the market clearly does not know how to price it today. I mean, the stock just fell off a cliff at the open. It was down over 23% in the pre-market. Investors were obviously panicking over the lack of a signed tenant lease. But then it staged this completely bizarre, massive intraday reversal. It actually finished the regular session up around 8%. Just a brutal whiplash.
Honestly, it makes sense when you look at the raw financials. Just a quick legal aside before we dig in. Everything we say here is just our personal opinion, not financial advice, so please do not go buying industrial power plants based on our banter. But look, Miro, they are a pre-revenue company, $0 on the top line. And their operating loss, specifically the G&A, it spiked 255% quarter over quarter. They hit $134.3 million in operating losses.
Right. You look at that and it looks terrifying, but we have to separate the accounting noise from the actual dirt they are moving. That massive operating expense jump, that was mostly non-cash. About $104 million of it was just share-based compensation tied to their October IPO. What actually matters for Fermi is the capital expenditure. The $474 million they spent in Q4 was hard cash out the door. They're aggressively buying up gas turbines and heavy equipment to build a multi-gigawatt AI power campus. It's all about what the CFO called speed to token. Basically, how fast can you get an AI data center powered up and training models? They're spending like crazy to win that race.
Right, and a race powered by turbines that the CEO apparently loves more than his own family. Seriously, did you catch that moment on the call? An analyst asked if they might sell off some of those generators to preserve cash, and Toby just deadpanned that he would auction off his two boys before he let a single turbine go.
I did. It's a great line, but it's also a strategic signal. He's telling Wall Street that those generators are the absolute bottleneck for the entire artificial intelligence industry right now. If you have generation capacity, you hold all the leverage. But look, the reality is their cash burn is staggering. Even with the net loss narrowing down to $133.2 million this quarter, it's still a huge bleed. They're sitting on roughly $408 million in cash right now. That sounds great, sure, buoyed by the recent IPO, but management flat out said the first phase of this project will cost over $3 billion.
Which means they desperately need these unicorn tenants to sign on the dotted line to unlock the real project financing. The clock is definitely ticking on that. All right, there's a very weird story in the filings about a lost tenant advance we need to dig into, so let's get into the details.
Yeah, so this is where the SEC filings actually get fascinating. Back in November, Fermi announced they signed this $150 million advance in aid of construction. The industry calls it an AIAC. It was with their first major prospective tenant.
Right. And just to translate that, it basically means the tenant pre-funds the infrastructure, right? Like putting down a massive upfront deposit.
Exactly. It is non-dilutive capital. It lets Fermi build out the grid connection without taking on project-level debt or burning their own equity. It is the holy grail for a developer. But then you look at the Q4 filing, and in December, that exact same tenant quietly terminated the funding agreement.
Wow. Okay, wait. They just walked away? With power being this incredibly scarce asset right now?
Well, no. The letter of intent for the lease is actually still active. They still want the power. They just pulled the cash advance. And this completely explains why the stock cratered 23% pre-market. Investors saw that funding disappear and immediately panicked about liquidity risk.
That makes total sense. But I still do not get why a hyperscaler would pull the cash if they're desperate for the site. Are they just playing hardball with their own balance sheet?
They are, but it is actually worse than that. It's a supply chain failure on the tenant side. Fermi has the generation, but management realized the tenants literally cannot source the gear to connect to it. It's the MEP, mechanical, electrical, and plumbing infrastructure. It's totally bottlenecked.
Oh, right. Which is why Toby Neugebauer went to that Schlumberger factory. He basically hopped on a plane to Shreveport because he realized his own clients were incapable of building data centers fast enough to use his power.
Exactly. He walked into that modular building plant and realized they needed Schlumberger to practically build a factory next door just to handle the tenant-side plumbing. And because of this, Fermi completely pivoted their strategy. They're doing what they call reverse due diligence now.
Okay, I love that phrase. What does that actually look like in practice?
It means they audit their own customers. If you want a gigawatt of power from Fermi, you have to open up your supply chain and prove you actually have the chillers and transformers to use it. Toby had this great quote on the call. He said, "While we are signing new LOIs, we are in the mode of coffee is for closers. We are not serving coffee until we have a complete close."
Okay, pure Glengarry Ross energy there. I mean, it's aggressive, but it also sounds terrifyingly risky. You're turning away hungry customers.
No, actually turning away small customers. They are intentionally refusing anyone asking for under 500 megawatts. He literally said a 200 megawatt tenant would be a problem for them. They only want gigawatt-scale, investment-grade whales.
Jeez, it is just such a high wire act. You are sitting on zero revenue and turning down 200 megawatt deals. But I guess if you have the only functioning permit for a 6-gigawatt campus, you get to make the rules.
You do. And to play that game, you need ruthless operational execution, which brings up the craziest anecdote from the quarter. It completely flew under the radar. Did you catch the Port of Houston story?
I think I skimmed something about tariffs, but tell me.
So there was an imminent Supreme Court ruling about to drop. It was going to drastically hike import tariffs on energy infrastructure. Fermi had 165 shipping containers floating around packed with massive Siemens SGT 800 gas turbines.
Which is basically their entire business model sitting in metal boxes.
Right. So management physically reroutes the entire shipment into the Port of Houston foreign trade zone. They check the cargo in literally seconds before the tariff ruling went into effect.
You're kidding me. That is straight out of a geopolitical thriller.
I know. It saved them an estimated $27 to $30 million in a single afternoon. It's brilliant logistics. It shows they're incredibly agile. But it also proves how building heavy industry in the U.S. right now is practically a blood sport.
That is wild. But it really brings us back to the core issue. They can dodge tariffs and stockpile turbines all day, but they're still burning millions to do it. The CEO even admitted he has a standing daily cash meeting at 4 p.m. just to manage the anxiety. He called himself a financial sissy, which is an amazing thing for a founder to say out loud.
It's honest, though. You cannot build a $3 billion phase one project without a little paranoia.
Very true. So if they are turning down the small deals and demanding supply chain audits for the big ones, where does this leave them heading into next quarter? The clock is ticking to show the market a real contract.
Right, and that clock is very literal. Their ground lease with Texas Tech actually requires them to prove tenant adoption by the end of 2026. So the outlook is tense. Management expects Phase 1 to cost over $3 billion, but the CFO explicitly said no more cash gets committed to the next phase without an executed lease and closed project financing.
Okay, so it is just a giant standoff. They have the power generation, the hyperscalers have the AI chips, but everyone is terrified to write that first multi-billion-dollar check. And it seems like, well, there's also this totally separate anvil hanging over the stock while they wait. I'm thinking of the insider selling issue.
Oh, the 550 rule. Yeah, it's a very bizarre structural quirk. Because they elected to be a real estate investment trust for the tax benefits, they legally cannot be closely held. So 5 or fewer people cannot own more than 50%.
Right, and the founding family still holds around 38% of the company.
Exactly, which forces a mandatory orderly sell-down of family shares in the coming months. So you have a built-in stock overhang hitting exactly when they need market confidence. Plus, the CFO flat-out told analysts, quote, tenant revenues are expected to commence in 2027, but even when they do, they will not be sufficient to fund our full operating capital requirements.
Wow. That is just bracingly honest. They are basically saying, look, we are building an entire city from dirt. You are not going to see profits for years. It takes an absurd amount of conviction for an investor to hold through that valley.
It does, but if you actually believe AI development hits a wall without gigawatt campuses, Fermi is one of the very few doing the hard physical work to solve it. I'm obviously skeptical of their timeline, but I have to respect the audacity of the execution.
Audacity and a couple $100 million in gas turbines. Let's leave it right there for today. Thanks for digging into the weeds with us, everyone. We will catch you after the next call. If you want these earnings breakdowns to just naturally show up for you every week, feel free to follow the podcast wherever you listen. And just as a quick reminder of how we do things here, my voice and this exact conversational script are actually AI generated, but they're driven entirely by real human-curated financial research. We'd absolutely love to hear what company you want us to unpack next, so just drop a note to earningsunscripted@datamadness.ca or grab our X link right in the show notes.
Catch you next time.